I am mining investor and editor of Resource Stock Digest. Gerardo del Real here with my partner, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle. This is the 307th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets, we're going to talk rates, we're going to talk gold, we're going to talk copper, we're going to talk Bitcoin, we're going to talk about a whole heck of a lot of things. We're going to talk about Bizarro World because that's exactly what the world is right now. But before we get to all of that, how are you, Mr. Hodge? How goes you? How's the family?
I'm doing super, Gerardo. We've got a basketball game tonight that I'm excited to get to, and we have a cat stuck in a tree. I like to give you little updates about the Hodge farm. So we have this outdoor cat that must have got chased up by a tree by a coyote. It's been there for almost 48 hours. They say much beyond that, you got to go up there and get it. So my ladders are not tall enough. We'll see how this escapade unfolds.
Oh, man. Well, all the best to the cat, obviously. I'm glad that the kids are well. I'm excited for your basketball game. I'm glad that the family is doing well, and fingers crossed, sending good vibes to the cat. But winters can be cruel. Being up in a tree where you can't get down, I can't imagine is the most lovely of endeavors. Well, listen, I think that's actually a good metaphor for where we are with the markets, right? Not the most lovely of weeks. We said last week that we were going to see what the overall indices did and that we would have a clearer picture this week, whether or not we were going to continue to see a couple of things, right? The sector rotation out of tech. If we were going to continue to see a downward trending market, if Donald Trump was indeed going to impose tariffs, by the time this podcast is over, it's quite likely tariffs are back on. And then by the time you listen to it next week, for those of you that are listening to it in the non-premium form or fashion, things could have changed 3 different times by then, right? And I think the uncertainty that we're seeing in the overall indices is largely in part because, and excuse the profanity here, nobody seems to know what the fuck they're doing unless you believe that, you know, and if you do, I believe you're wrong, by the way, unless you think that Trump is playing 3-dimensional chess with everything, the department cuts, the firing of 80,000 veterans, all of the other things, some of the things that I like half the IRS is going to get slashed. Like, that's cool. You know, that's not complaining about that. But some of the other stuff we talked about last week, taking a chainsaw to slashing spending and slashing departments. And I don't think it's a coincidence that the markets were down big this week. And I also don't think it's a coincidence that we're going into a Friday where the Trump administration just met with Elon and a lot of the heads of these departments to make sure that they're not just firing people through an algorithm, right? Which is kind of what it seems like to me has been happening. Back to the overall indices, a lot of uncertainty just in general. The markets clearly don't like it. The dollar clearly doesn't like it. Thoughts on the overall indices?
Well, we were saying last week that they were, by this week, we would know sort of the direction. I've been on the uncertainty / confusion theme for a couple of weeks now. I told you none of the stuff made sense, and if it did make sense, that some of it was getting reversed, and there were carve-outs and exemptions and reversals and court challenges, and all that continues to be par for the Mar-a-Lago course, if you will. We had the Supreme Court reject the $2 billion in spending cuts from U.S. aid. We've had the Atlanta GDP come out and the Atlanta Fed with their GDP projections come out negative now for the first quarter, and lots of other folks who put out projections for GDP estimates have significantly trimmed their targets. Let's say it was supposed to be between 2 and 2.5% growth for the first quarter here in 2025, and now you're seeing targets anywhere from less than 1% to negative growth. In fact, as we wait and see what the implication of these tariffs are going to be. You had more reversals this week. Now the auto complex gets a carve out or a 1-month extension. We're waiting to see. You know, it's sort of like it's very much tit for tat. And the most recent thing I heard Trump say was, you know, if any country comes with retaliatory tariffs, then they're going to get double the tariffs that are already on them. So I was
100% on top of 100%.
I was thinking of Dumb and Dumber when they're you can't triple stamp a double stamp, Lloyd.
And that is the state of affairs in our world right now, everybody.
That's exactly right. So wait to the broader indices. You've got the volatility index that's was up above 24 today, which
Yep.
means put buying continues to go. Last week I put up a chart for you of the S&P. I don't see my share button right now. Maybe I'll get to it in a second. But the S&P has broken down. It didn't catch itself in the 2800s and now has broken down south of support and is in danger of correcting. It could go down another 100 points or so and just do a whole 10% correction. So for the year, the S&P is now down some 2 to 3%, closer to 3%. There's only a couple of sectors of the S&P that are up for the year. And we'll see. You said he's not playing three-dimensional chess. I agree with you. But I think you can play two or three-dimensional chess and front run the guy, right? Because like you
Fuck
said,
yeah.
during this live podcast on Thursday, it's one thing, but by next week, it's going to be the other. And so even if it's, selling on relief rallies, which I did some of this week, like we had a 300 or 400 point up day this week, and that was just when he reversed the auto tariffs, and then we're back down to the negative trends. So you can bet that there's going to be ebbs and flows. The S&P is now short-term bearish. It was only a couple of weeks ago we were saying nothing was bearish, and how quickly things change, right? Once the algorithms and the market decide that they don't like this uncertainty, and they're going to continue to wait and see, and they're going to continue to sell, which is obviously why the S&P is going down. More sellers than buyers, right?
Listen, folks, that's a very articulate, intelligent way of telling you what I'm about to summarize for you. The overall indices are probably going to continue down until we get some certainty. And you know how I know that? I just watch what they do, not what they say. I listen to what they say. What they say is funny, and what they say sometimes disgusts me. Much like the State of the Union address, and we'll get to that later on in this episode, in this podcast. But when Trump tells me that he's no longer looking at the stock market, it's like the little kids is like, you can't see me, so I'm not here. I'm not here. You can't see me. Trump's not looking at the stock market. Shit's going down, everybody. It's going to continue to go down. I don't want anybody panic selling or anything like that. I don't think it's going to be disorderly. But yes, I do expect further downside in the broader indices, not the playground that I typically play in, not my sandbox. Everybody knows my sandbox. It's natural resource stocks. And so we'll get to that in a second. I want to talk dollar index, and I want to talk rich guy says the American dream is not about access to cheap goods. Now, that's almost a real CNBC headline. It's Treasury Secretary Bessent says the American dream is not about access to cheap goods. The talking point is Bessent on Thursday offered, and I always love this term because who doesn't love a good full-throated defense? He offered a full-throated defense of the White House's position on tariffs, insisting that access to cheap goods is not the essence of the American dream. That is rich guy for good luck staying poor. That doesn't affect me, is kind of how I take that. And I think it's a bit tone deaf, even if, as I believe he does, even if he means it. Look, man, when inflation's ticking up and everything's getting more expensive and finding a good paying job is getting more difficult, and upward mobility is near 50, 60-year lows, there's probably better ways to phrase it. Not that I'm big on optics, but it tells me a lot about the psyche of this administration. And the fact that as Donald Trump said this week himself, he said he's willing, said this in the State of the Union address, which was a shit show, I must say, on both sides. But he said there's going to be some short-term pain and more short-term pain. And look, it seems like at the very least, he's got conviction on these tariffs, which, again, I've said 100 times on this show. Tariffs are no good. Tariffs are no bueno. Gold is telling you that. We'll get to that. Silver's telling you that. Copper sure in the heck is telling you that. And the U.S. dollar index is telling you that despite all the cuts, what Nick and I told you last week is ringing true. They're actually adding more to the deficit than they're cutting. And so the consequence of that is going to be a dollar index that was near 110 just a couple of weeks ago, is down to the 104 level the last that I looked. That's a pretty drastic move in the currency market. So, look at that. I mean, that is a move. We're not talking about one of Gerardo's junior resource stocks, right? That trades, 50,000 shares a day. We're talking about the US dollar, King dollar. That's a drastic move. Thoughts on the dollar index and how it correlates to the volatility index? Because I know you watch both.
Yeah, you said it well. So And we've been saying it, right? This is just the market now is finally getting it through its head, right? They're going to cut rates. So you've got maybe not this month in March, but certainly by the middle of the year, you're pricing in a greater than 50% chance of rate cuts now. And that's looseness, or that's easing, and that translates into a weaker dollar, right? And so that's what you're seeing here. These are big wide candles, which you rightly called out. They haven't been going down this fast since sort of last October. I pulled the chart back there, and I didn't see negative candles like that until, like, these are some wide candles back here in the late summer of 2023. But those are really big down days for a currency, right? And that's obviously really good for gold and the commodity complex. And it's sort of, the commodity complex has turned a little bit, because we were saying that it was the softs that were running. There's been lots of talk about eggs, lots of talks about coffee, lots of talks about chocolate. Things are starting to pull back a little bit. Wheat has been soft. Milk has been softening up. Oil is at multi-week lows or multi-month lows. Maybe we just look at it for a second, because I want to talk about inflation, and then you asked about volatility, so I'll get there. Look, this oil is, oh, that's not the chart I want. I'm sorry. Gonna get a U.S. oil. There it is. Look at this
I
oil.
usually like big and wide, but I don't like big and wide on U.S. dollar candles. That doesn't work for me. It doesn't do it.
Look at this. So yeah, oil's wanting to put in a short-term bottom here. It's the lowest it's been since last September at $66 a barrel. This is a major input to the inflation number, right? So
Yep.
whereas just a month ago it was inflation up and growth was supposed to be going up, how quickly things change, right? Where now, I was just telling you, growth projections are down, and you'll likely see inflation, fairly below 3%. We just saw a 3% print most recently, but I think you see it, closer to 2, as I show you oil at $66. And then let me clean up this chart so there's not all this gobbledygook on there. Look what the rates have done, and this was Trump jawboning them down from 4.8% back in January, now just down to 4.2% or so. This is pricing in growth. It's not just Trump and Bessent saying we want rates lower. It's the market starting to price in rate cuts, and it's the market starting to price in that slower GDP growth in the U.S., right? The 10-year that reflects the growth expectations by and large. And so the market's really concerned what these tariffs are going to do to growth. The market's concerned what these tariffs are going to do to, as a result, the bottom line of companies, to earnings growth. And that's resulted in the selling of the S&P that we've seen for, I think it's 8 of the past 11 days or 9 of the past 12 days, something like that. Again, taking us down to negative 3% for the year. So lots of consternation out there about the unclear messaging and the reversals and the carve-outs, which I've said was going to be the case. Do I think there's a point this year, likely in the next month or two, where it is time to buy? I think so.
Sure.
I don't think that Trump is going to drag us down into the graveyard, but for now, being very cautious. And I should point out, have been very cautious. If you go and look at the February issue, or even the past couple of issues before that of Foundational Profits, we've been in a third cash, or we have not been in the S&P. And we've done well this year to pick and choose our spots, even closing out things and taking gains in sectors that we're showing on the table to position ourselves certainly well ahead of a negative 3% return in the S&P so far this year. We're definitely in the positive on our closed portfolio. So a little chest pounding there, but Trump is erratic, and this is you're seeing this being reflected in the markets.
Yeah, I want to. You said erratic, and I couldn't help but think of the State of the Union, not because of Trump. I mean, it was the longest State of the Union ever, but it was kind of. I'll tell you a funny story. Funny, not funny. I started to watch it, and then I said, you know what? There was a good basketball game on another network, and I said, let me watch the basketball game, and then I'll go through the speech a little bit later on when the game is over, or during halftime. I'll turn back and start it on over, right? And so it was a great basketball game. It ended up lasting about an hour and a half, and the game ended, and I went to go restart the speech, and it was still going, man. I was like, holy smokes, right? And we'll get to the and there's no other way to put it, folks. I'm gonna curse, but the shit show that the Democrats were, and the Republicans. Look, they won the House, they have the majority, they won the presidency. They're supposed to flex. Like it, don't like it. To the victor go the spoils. And so the Democrats should have known they were going to take it, but there was a lot of just just political theater that really serves zero purpose to citizens like myself or their constituents or the people that voted them into those offices. Zero on policy, zero on action plans. They're doing TikTok dances right now with little effects like Marvel Universe effects to show you that they're citizen warriors and they're going to fight for everyone's rights. And I'm sitting here going, can you show me the line item things that you're doing? At least with Doge, I can go to the website and be critical of, the stuff they're cutting or the stuff they're not, or the precision with which they're doing with. And let's be clear, folks, the reason they're having meetings, as I said up top, it's because it's not been very precise. There's a headline right now, and I triple checked it. It's a real headline because you never know nowadays, right? From Bloomberg TV. Doge effort to sell off federal properties inadvertently exposes CIA black site in Northern Virginia. I can't make this shit up, folks. I cannot make this shit up. I can't believe that's a real headline. Forget, the obvious question. What are we doing with CIA black sites in the U.S.? Right? That would be question number one as a citizen who believes in smaller government, more efficient government, constitution, and everything that comes with that. Let's just put that whole thing to the side for now. The fact that it's that erratic, and the fact that on the other side, there is zero cohesion, zero action plan. Again, I get all my political news now from Jon Stewart, and I wish he were running because I actually think he would be an effective politician, an effective independent. I know he leans left, but he's been a very, very rational voice for a very, very long time. And I don't hear anything from the left or independents, frankly, right now, that just inspires confidence in, the future leadership. And look, again, I'm not talking about the Republicans because they're in power right now, and that's the way it's going to be for the next 4 years. We'll talk policy all day and night, but they're sitting on the throne right now. I wish the people that aren't sitting on the throne were working hard for their constituents to have some sort of a cohesive policy moving forward. That's not happening right now on either side. And the market knows it, and the US dollar is sniffing it out, and gold has snuffed it out.
Yeah, gold had an $80 or $100 day, right? Went back up above 2,900 after going down to 28.34. I showed you the chart last week. I won't bring it up, but I said it was either going to catch itself there or it wasn't, and it did, and it turned right back around and it went to 2,900. I did not watch the joint session of Congress speech. I saw some highlights. In the West Coast, it was a weird time. It was bedtime and dinner time. And then by the time, like you said, I was sort of watching it on Twitter, people live tweeting it, but I didn't catch any of it. Dog and pony show for sure. I don't have a lot to say about the Democrats. I haven't really been paying attention, as I told you last week. Jon Stewart rubbed me a little bit the wrong way during the election. He was really showing his left-leaning colors, and I've liked him for a long time. Huge fan of Jon Stewart. Even thought
Sure.
that he could potentially be the great champion, which is part of the fourth
Sure.
turning. We still need that person to emerge. I'm not sure who that's going to be, but I was just thinking about the fourth turning while you were saying all these things, right? I mean, of course, there's a CIA black site in the United States that is now being exposed as we go line by line through the American institutions that we know are rotten to the core. Like, of course there was. So bring it on. I'll be here on my acreage with my 2 wells and all the other things I need. And I continue to watch the market curiously, but the market, make no mistakes, I'm not watching the political dog and pony show. I don't think it affects me, nor do I think it affects you, not you, Gerardo, but you,
Yeah.
the listener, as much as you think it does.
Let's get to what does affect me personally here, and my net worth, and my the checks that we've written, and we've written a lot. I mean, you and me I've been on the phone all week, with a group, and we're writing another one that I didn't plan on writing, and that's happened to me more often than not here in the past several months, writing checks that I didn't anticipate writing because, frankly, they're so damn opportunistic, and we through private placement intel, we've been able to put out some really high quality deals. And we've been talking about that every week for the past several weeks. I can't help but continue talking about it because the more I dig into the deals that we're betting, the more I like and the more there is to like. And right now, for the first time in a long time, I'm getting stretched thin with the amount of capital that I'm spreading around because it's hard to say no, right? You can't kiss all the girls, but I mean, it's a lot of pretty girls running around, right? And so, I've been writing checks left and right, man. I mean, I'm excited for it. It's not, 4 months and a day type of check writing, meaning I'm not just buying into stock, to market it and flip it and get out of the position. These are actually companies with real business plans, real teams, real assets. At early stages, $1 million market caps, $5 million market caps, $8 million market
Mm-hmm.
caps, and companies that have the potential to go from 1 million to 20 million to 50 million to 100 million in pretty short order. And again, last two deals that we offered, one is a private company. We'll talk about that here at the portion of this podcast that is the premium portion of this podcast, right? And that company is going to do phenomenally well. That placement is still open, by the way. And so if you are looking for an excellent private deal, gold deal that's got a lot of torque that'll go public here in the next quarter, I highly recommend you subscribe to Private Placement Intel. And the other one, again, the other one's up some 70%. It's not even closed yet, right? And it comes with a warrant. The warrant's already in the money, if I'm not mistaken. So it was a good 2024. We're off to a hell of a 2025. You talked about chest pounding a little bit. Yeah, we should be pounding our chest a little bit on this one, but also know that it's not to be braggarts. It's to hopefully include you in these deals and allow access to you in these deals so that you're able to continue to make money in an economy that otherwise is providing very few opportunities other than those that are very well connected and very rich with access to capital.
It's like this. So we've been pounding the table on this, and I'm just going to keep going. I try to
Yep.
do it in different ways so it doesn't sound the same, and you don't get bored, and I don't sound like a braggart. But these are the documents for the Finnish deal. Last week we talked about Finland for a long ass time. The deal before that was a porphyry project, two porphyry projects in BC. The one that we funded at 42 cents, I believe it is, with warrants at 60. And yes, those are already in the money, Gerardo. I think it closed right at 60 today. These documents, this is called subscription documents. These are the documents you fill out to send to the company that you're buying shares from, directly or privately. And this company is truly private. It's going to be an IPO, an initial public offering. It'll list on the TSXV over the next quarter and then be drilling in Finland in Q3 on highly prospective land packages that have already delivered, 95 gram per ton, grab sample and
Yep.
trench results. So the first point is this company's private. It can't go down right now. And so you wrote an article talking about how things have been volatile, and one of the ways, and it's very counterintuitive, but if a company is private, yes, small companies are highly volatile. We talked about being down 50% before, it goes on a big run. This can't go down. And so not until a list anyway, of course. Writing a check into this while the market is melting down has really no psychological impact on me because again, I know what the price is. I know what the market cap is. I know the valuation at which it's being done. And I'm highly confident that the entity is going to be worth more than that once it's publicly valued in the market, given the land package that it has. And that's one of the benefits of investing this way with us is you get to get in super early. In this case, before anyone gets a chance to buy shares in the public market. Right over this shoulder, maybe one other week, I'll have it up here on the desk with me, is a file box with over 100 folders in it that each contain one of these, the subscription documents for a company that I've invested in privately. And I've
Nick
now
is so organized. I laugh, y'all, because I'm the complete opposite.
That's funny. I've seen people.
It has this. But
I
I have FedEx envelopes just laying around. This is me being organized here. My last
funny.
3 deals are on 2 envelopes.
So in those FedEx things that Gerardo's holding up is either, I don't know, subscription documents. More likely is their physical share certificates or their DRS statements, which you would then deposit with your broker. So where was I going with that? So we've done this over 100 times. No, you made a good point. I do have a spreadsheet with every deal I've done, how much I put into it, etc. And so I'm at the point now where I've written millions of dollars of checks into companies. I've taken out millions of dollars to buy things, houses, pools, tuitions, shoes, whatever it is,
Ponds.
flowers for my wife, ponds, and I still have millions of dollars in a portfolio. So it's worth repeating. I've spent millions of dollars investing in private companies this way. I've taken out millions of dollars investing of companies this way, and I still have millions of dollars in my portfolio from investing this way. And so the only way you can really get a feel for it is to do it. So check out that private placement webinar.
Yep.
We've said it a million times. We're guaranteeing the chance to double your money on a deal over the next 12 months. We're giving you 6 months to check it out, and you can refund and get all your money back after 6 months. And over the past week, I put in even more work based on some of the feedback we were getting. So I've done 2 new reports over there at Private Placement Intel in the past week. One is a soup to nuts tutorial on how to participate in a private placement with us, starting from the moment you get an alert to contacting the company, expressing your interest, how you do that, getting these subscription documents, filling them out. I did a screen grab where I put the PDF up and I filled them out live in real time, so you can watch me do that. All the way through to choosing a broker, getting the legend off, getting your shares deposited, etc. So full tutorial up about that, and then you will need a broker, and then some folks had questions about that, and so I did a separate sort of 1 or 2 pager about brokers. There's a list of brokers that Gerardo and I recommend from brokerage houses where we each personally have accounts.
Yep.
Sprott, Canaccord, Haywood, for example. A couple of brokers that we've done business with and continue to do business with, and then links to the rest of those brokerages, because there's more than one way to skin a cat. You don't have to use the broker that we do. Those are just people we know. So we want you to invest this way. We're interested in helping you invest this way. And sorry, I've been going off long about private placements, but we've been doing really, really well. Our subscribers have been doing really, really well in the companies we've invested, and we have the opportunity, as Gerardo's been saying, to get into good deals, and therefore for you to get into good deals alongside us here in the early part of 2025. So we continue to offer more than 50% off pricing on private placement intel, and definitely hope you'll check it out.
Well said, well put. For those of you that, have listened to us for some time, I hope you guys and gals by now know we're absolutely passionate about helping people learn to invest and learn to fish for themselves, right? It's not necessarily that you have to buy every recommendation or like every recommendation or sell when we sell or buy when we buy, but just getting yourself familiar with the language and the approach and our vetting mechanisms, right? What we go through to make sure that these are quality deals that give you a legitimate shot at 2-fold, 5-fold, 10-fold, 50-fold, 100-fold your gains. We enjoy doing that. Nick and I have had conversations. At what point do we just decide to throw in the towel? And we both kind of immediately were like, we're never going to throw in the towel. Like, we just love what we do. It's fun. It's I think Nick and I are both competitive. We both grew up playing sports and competing. And yeah, this is a way to compete, not just against the market or anyone else, but compete against yourself in a sense, right? We take a lot of pride in being able to bring good deals to you all. And so with that, the premium portion of this podcast, you're really going to get your money's worth, because I didn't go to PDAC and neither did Nick this year. But one of the ways that we vet deals is, we have advisors that we're close with. And so one of our closest advisors, the closest advisor, was out there and working and working on his behalf, but, by default, working on our behalf and working on subscribers' behalf. And even he came out optimistic on that when I told Nick. He's typically, Nick tends to be more reserved than I tend to be overly optimistic just by nature. It's a perfect yin and yang. And then, our friend advisor over there, he also tends to be really pessimistic with a lot of stuff. It's not a lot of stuff that he likes. So when he walks away with a smile on his face and calls me excited and tells me he thinks this is going to be one of the best years we've ever had, this is coming from a 30-year veteran that again he does it for the sport. He doesn't do it because he needs the money. He doesn't do it because he needs to be taking back-to-back meetings all day long for days on end in the cold. He does it because he loves the sport and has a passion for it. And so now, when we get to the premium part, we'll talk some stocks, we'll talk some rumors. We'll talk me being overly optimistic, and I'll put it out there on the things that I heard. And if half those things are correct, then it's going to be a great 2025. Yeah. So subscribe, y'all. Follow along. If you don't double your money, We'll give you your money back, or we'll give you another year, whatever the deal is, whatever Nick said, that's what we're doing.
One more point is
Mhm.
is that it's real, right? You've heard me talk a lot over the years about fakeness. I've given presentations about fakeness on the internet, fakeness in our lives, all the way from Instagram filter fakeness to products that don't do what they say, et cetera. And I see a lot of that still on social media with these personal finance gurus and investment gurus. And really, there's a lot in the real estate space, like, how to have so many doors under your management or have an Airbnb business. And those guys are selling you a course or a way of doing things that's highly idealized and stylized and
Yep.
fake, essentially. They're in a rented house or in a rented car, pitching you this thing on TikTok or on Instagram. We're not pitching you a course or a class. We're saying, hey, come invest with us on the same terms that we're investing in. Like, you're going to be participating in this deal on the same exact terms that I'm getting in. I don't have cheaper paper. I didn't come in on a previous round in this deal. I'm writing a check for the first time on the same terms that you'll be able to write a check on. And so when I see some of these things on social media, which of course is already highly polished and idealized and reflecting the best possible thing, talking about how much money I can make in real estate or an Airbnb, I wonder, like, why don't you just invite me into your deals? Like, can I be a partner in your Airbnb deals? The answer is no, right? The answer is you
Yeah.
got to buy the course and try to do it for yourself. Here again, we're not saying we're going to teach you how to do private placements and you go out and find your own private placements and good fucking luck. No, we're saying come and do these private placements that we've already found. We're essentially inviting you to be partners with us in these deals. And it's quite different and for me, at least, refreshing from what I see out there, because it's a lot of drudgery and fakeness from what I have to sift through in the social medias.
Only fake I like is those Kardashian girls, man. They do fake well, but other than that, try to keep it as real as humanly possible. It's in my last name, right? One last, two last things before we pivot over to the premium portion of the podcast. I
Yep.
want to talk silver because we talked gold. We said last week silver was looking really, really robust and resilient. It had itself a heck of a week in light of a dollar that's weakening significantly, as we pointed out, but it's looking really, really good to me. You are the chartist amongst us, and you knew I was going there, so you're likely typing up the chart there as we speak. Thoughts on silver? Are we going to get that $33, $35 breakout that we've been expecting?
It looks pretty good as long as it doesn't break down. If you want to see, sorry, I got you maximized, so I gotta do a little bit of stuff here, but here we go. Yeah, look here, right at the top of where it needs to break out.
Yep.
So, which is likely the level you said. Sorry,
Yep.
I gotta peer around my microphone and
No,
like
no, no, you're good.
$32.50. So, this is the line, and if it wants to get above here, it can continue higher, and then it has to hold that, of course. So, crystal ball
Beautiful
is,
chart, by the way. Look at
yeah,
that.
the chart looks good. I mean, just like gold. So, if it wants to keep itself in the precious camp, which I told you a few weeks ago, I was sort of changing my tune on silver. It's looked good since then. Yeah, that's a beautiful chart and looks like it wants to continue reflecting its precious nature as opposed to its commodity nature. Just for shits and giggles, while we're here, let's look at the CRB commodity index. This is what I was saying about commodities. You see here how they've started to come down a little bit
Yep.
off this green line, because they include the softs and stuff. And so it's not all rosies for commodities is the point I wanted to make. And that's why the distinction needs to be made between gold and silver as precious
Yep.
and some of the other commodities that aren't faring as well, including uranium, which I wanted to talk about for a little bit.
Yep.
So
That was
there's
my
some
next one.
commodities that definitely aren't doing as well.
Well said. Well said. And you actually segued exactly to where I was segueing to, which is uranium. Look, I'm a contrarian by nature. I like buying stuff when it's low. I like holding it when it's out of favor. Whether it's lithium, whether it's Patriot Battery Metals, whether it's companies like Q2. I like knowing when I have world-class teams and world-class assets and long-term and mid-term fundamentals that favor me. I don't care about a year or two consolidation or pullback. It's just the way that I speculate. I try to invest and speculate in 3 to 5 year cycles and spread my commodity exposure, knowing that all things aren't going to work at the same time typically, and that has done well for me. And so uranium right now, look, I got to say, even the uranium bugs are a lot of them are thrown in the towel. And anytime I see that, whether it's on social media, or just at conferences or CEOs even, it tends to signal a bottom. It warms my contrarian heart. I think there's a lot of great uranium exposure out there, and this is the time to either be topping off positions or initiating positions, because the people I speak with that are much smarter than I and are in DC lobbying and are at the conferences and negotiating contract prices with utilities, all of them say the supply demand fundamentals have never been better in the mid to long term. It doesn't take much for that train to get going. It's happened 2 times here in the past 6-7 years. I think we're getting close to the third time here.
I'm going to try to show you a couple more things. Let me see if it's going to work for me here. I need to brush up on my tech skills.
Yeah.
I sat in on another, I wonder if I maximize it, if it's going to work. No, it's not. Oh, that's sad. I sat in on another S&P presentation. This was just on nuclear as it relates to growing power demand in the U.S. And I'm sorry, I'm sorry I can't share my screen, but I can just tell you what the numbers are. So one of the most impressive charts, and the reason I wanted to talk about uranium as basically a contrarian speculation, as you said, even uranium bugs are throwing in the towel, is I think it's a great buying opportunity. I have recommended Energy Fuels in the past month or so. I've been adding to my position in Denison amid this weakness.
Get y'all getting free names from Nick.
And there's a lot of ones I don't own that have had good runs, not in the uranium space, but on the nuclear side of things, that have been down 10-15% a day for the past couple of days, like the Oklos and the New Scales and the Light Bridges and the Centruses and things like that. So I think there's a really big opportunity. Oh, it says my browser needs permission. That's why. Next time I'll get that all figured out. But anyway, this is the estimated and projected data center power consumption. Now, just data centers, total terawatt hours with a T, not gigawatt hours, terawatt hours in 2025, 446. So that's this year, 446 terawatt hours. You want to guess what it is in 2029, just 4 years away? It's 795. So, essentially almost a doubling, 795 terawatt hours of required electricity just for data centers now, right? And the S&P presentation went through all the recent announcements, the 3 Mile Islands. I'm not going to rehash all that sort of stuff. But one guy said he was talking to a data center procurer for one of these big tech companies, didn't say Meta, Amazon, or whatever. And the guy was saying, we don't care if we have to burn tires. We're going to keep the power on at these data centers, right? And so that speaks to the supply and demand nature of it, right? Because there's only a few ways you can do that. Natural gas is having a bit of a moment now. That's sort of the bridge to get to where we need to get to with the nuclear. But at the end of the day, it's really nuclear and hydro that can provide that stable baseload power. And as you know, it's a bizarro world, Gerardo. Hydro is under pressure in the U.S. for whatever reason. We want to tear out dams, and so we find ourselves in this scenario where nuclear is getting more reception from the green community than hydroelectric. And it sort of was, I've said this a bunch, but it was always going to play out this way. And so, yeah, if you look at a chart of uranium and it's down at $63 a pound now, like you said, it's fine. I'm not in this for 6 months. I've never been in this for 6 months. I've been in this space since the fucking reactor flooded in Fukushima. You know what I mean? Like, I've been around. I'm going to be around. So, and we've done well in those ebbs and flows. I'm not going to rehash that either. You can go and read the articles where we made 10 times our money on Azarga, etc. So, and before that, URZ. So, I don't want to ramble, but when you listen to these policy wonks talk and these S&P analysts, not Nick and Gerardo in Round Rock and Spokane, like the writing is on the wall for them. They put up all their charts and oh shit, I really wish I could share it because they go over all the processing capacity in the US and they're talking about like They talk about UEC, and it's like, I know UEC, man. Like, I've been to UEC, I know Amir. And you look at their little map, and it's like, like processing capacity in the U.S. is highly constrained. It's like, no fucking shit, it's highly constrained. There is no processing capacity. Like, it's minuscule. I've been there. So anyway, in order, there's only a couple of names. I won't rehash those either. You have
Yep.
some in your Junior Resource monthly portfolio. I just
Yep.
gave you 2 freebies, but yeah, the market's never wrong, right? I'm not trying to fight the market. Sure, that's maybe $63 is the right price for uranium right now, and uranium equities deserve to be sold down like they have in the short term. But
Sure.
that doesn't mean that I'm not a buyer of them at their current price for the long term.
Well said. Well said. I think that's the perfect perfect way to segue into the premium portion of the podcast, right? And so, again, if you haven't subscribed to that yet, it's dirt cheap. You get to hear all the stock talk. You get to hear what premium portion of the podcast delivers, which is, some whispers from PDAC, some estimates, optimistic thoughts about potential on stuff. And look, sure, a lot of it's banter, but I much rather hear positive things from the companies we're writing checks into, and from people that are looking at those same companies with a different bias or not bias, than not, right? Than the negative stuff. So I am Gerardo Del Real along with Mr. Nick Hodge. This was the 307th episode of our weekly therapy session that we call Investing in Bizarro World. Have a great week, everyone. Top off those positions. Hope you found this week's episode informative and insightful. And thank you to everybody that's written in and left comments on the YouTube channel there. We try to respond to all of you. Thank you for all of you that have written in. We've tried to respond and listen and adjust to different pieces of advice. And we appreciate y'all listening. Have a great week, everyone.
See ya. Catch you next Thursday.